Good morning, everybody. Thanks for joining us. Always excited to share industry benchmark data. So Q3 is now over, which is crazy to say. I'd rather say Q3 is over than we're in Q4 because that means we only have 3 months left to go in the year. But it's wild and crazy right now. But I'm sure it's all the same with you as well. We have some interesting data to show as always, right? I'm going to turn it over to Teddy. You know our company, LineLeader. We offer a full suite of products. Our core product is our enroll product. It's a CRM, but it's much more than the CRM. It's enrollment operations and ties into an engagement and management system as well. If you can keep going, Teddy. I think the important part here is the data. So I'm going to hand it over to Teddy. He's going to dive into it. There's a lot of stuff going on in the industry, macro trends. We'll touch on that. Are very familiar with you all. We're not going to tell you something you don't know. But hopefully we give you some milestones and some benchmarks that you can compare your business to. We're happy to help with that as well if you need some more guidance there on customer journey mapping, etc. So without further ado, I'll give it over to Teddy.
Awesome. Thanks, Brett. And yeah, thank you all for spending some time with us here this morning. And always exciting. This is, I think, something a lot of our customers and just folks in general in the industry look forward to. For those that don't know me, Teddy Hook, I run product here at LineLeader. Love the job in the industry we work in. And it's a pleasure for us to be able to take some of the data we have, look at trends in the industry and share that back so we can have the right conversations. We know the right places to look and we can monitor the health of our industry so we can drive change. So today, as Brett mentioned, really all of the data we're going to talk through is kind of this enrollment function, or almost this pre-enrollment, we'd call it, through our enroll product. And yeah, let's dive in. Hopefully everybody has fueled up on coffee. I think I said the same thing last time, and I probably will next time, or tea or whatever your caffeinated beverage is of choice, because we're going to be looking at a lot of data today. But data is interesting. Data is what can kind of guide our discussions. So hopefully y'all can stick with us today as we really dig deep into that. But one of the things that we'll get asked is, okay, well, where did this data come from, right? How are you compiling it? So I did want to talk about that up front. The data that we're going to cover today in our trended analysis, number one, it is from our US customer base. We do have the opportunity to work in a couple different countries around the globe. But today, for our audience, for our relevancy, we're talking about our largest market, which is the United States. We're also looking really at private-based ECE, heavily subsidized in many cases, but still in general, private-based ECE is a lot of the data. We do segment our data always into 3 distinct segments from a size perspective. And that's really just to help us understand the trends a little bit better. We can segment it that way so we understand kind of how maybe some of our smaller operators, our mid-size operators, and our really large operators are performing. And that's just to give you a better understanding of where you can benchmark against, right? You don't necessarily want to look at benchmarks of a 500 center operator if you're a single center operator, because their resourcing strategy is going to be entirely different. One of the very nice things about our CRM tool is very easy to aggregate data through the sales funnel. So while many of our customers will have a very different setup in their CRM system, everyone has a unique way that they approach enrollment through LineLeader. We have a very clean way we can kind of stack the statuses on top of each other to provide this type of analysis across the board. And you will hear me talk a lot about registered. And I think it's really important for folks to understand that when we say registered, what does that mean from our system and from our customer's point of view? It means that you've basically offered a spot. It means that a child has an expected start date. It does not necessarily mean that they have enrolled officially. It just typically means that they've been offered. And lastly, I think we're going to always get this question as a follow-up, and I promise you we're working very hard at this. But this is enrollment data. We're looking at data in terms of leads that pass through our system, we are not measuring this against capacity or age or retention. So when we kind of leave this call, we always like to provide you with some areas you can go diagnose your data, because you can do this. You can measure against capacity, you can measure against age, you can measure against retention. It's just very hard for us to do that at a global scale. So we're kind of just saying, hey, listen, we're going to look at it from just an enrollment perspective, but we'll make sure you understand exactly what the data is, so you can then go make those comparisons within your data set, which is great. So before we get into the objective, right, which is the data, which is not lying to us, right? We know what the data is going to say. I wanted to talk a little bit about the subjective. One of the favorite things about my job is the ability to constantly go and talk with customers in the space. And a lot of themes we've heard we wanted to share to kind of set the stage. Like, what are operators saying right now? Growth tends to be flat for a lot of people, right? I think we'd be surprised if a lot of operators raised their hand and said, hey, we're 10, 20, 30% growth compared to last year or the year before, right? That's unique if you're in that scenario. So I think a lot of people are seeing that growth is flat. It's not necessarily declining, but all areas of the business are being evaluated throughout the entire life cycle of enrollment to retention to figure out ways to grow the business. Um, Retention is an increasing challenge as well, right? Like this is hard. It's harder than ever to keep families from infant through 5 years old at your center, right? That's a challenge that is getting harder and harder every year. And that's something we always want to try to help provide some insights into. Heading into this school year, put a lot of focus on post-tour conversion. Love that we're hearing this from operators, right? There's a huge part of focus that you need to put on your marketing efforts in the top of the funnel, which is just generating leads, generating interest. But there's a huge portion that's bottom of funnel, right? The family comes and tours, now what? Now what? So putting a big focus into the post-tour conversion is huge. And I think we are seeing customers have success by putting a lot of focus into that area of the funnel. We're spending more on marketing than we ever have. It's amazing if you can come to your internal meetings with your stakeholders and understand the cost per lead, right? How much does it actually cost us to generate an interested family? I bet you it's a lot higher than it costs to keep families in your center, but it's going up. It continues to go up. And that's a challenge, right? Everybody has fixed budgets here. You don't have unlimited amount of money to go spend in marketing and demand generation. So we know it's getting harder and more expensive to generate leads. So what are some strategies you can do to make the most use out of the funds you have and double down on the channels you know are working? And I think this last point's really interesting for operators that are continuing to grow with new centers. How are we segmenting that out of the data as well? I think we have a lot of customers that like to take their data and split it into maybe new builds or new opening centers, maybe ramping centers, maybe mature centers. And this is going to help them look at their data a little differently, because when you mash them all together, it sometimes gives you a little bit of a muddy view of your data set, because new centers that are just opening are going to have very, very different kind of enrollment models than your mature centers who might not have capacity at all, right? So it's really important to segment that in your data. All right. Um, the last kind of high level view before we start diving into the data itself is just talking about macro trends. This is important when Brett and myself and other stakeholders from our company are involved in kind of discussions about our industry. We like to pull out the themes of what is really being talked about frequently, and these are some of them. Right. Public pre-K, I think, will continue to be one of the most important discussion points we have. And it is real, right? It is real and it is a real competitor. We're seeing a lot of data indicating that business segment continues to grow. It's not really slowing down, and it's particularly effective with those 4, maybe 5-year-old age ranges. So we're watching this closely, but certainly this is going to have a little bit of an impact on our sector. And we want to keep a close eye on this, right? Because I think it is very real. But I think there's good ways we can combat this, right? I think two is we are generally seeing what we are going to call kind of like a stabilization phase. That's what you'll hear from LineLeader as we look at the data in the conversations we're having out in the space. But we're still not really to those levels we saw post-pandemic when policy was really great, and families were really pushing to get into centers and growth was really high. But not a lot has changed from the pressures you all face day to day in terms of staffing, retention, regulation, licensing. Those are all pretty hard obstacles to navigate for growth. And this kind of relates back to the number one point, but market competition is high, right? You have a lot of really strong operators in the space that compete against each other. You do have still this kind of at-home daycare model that is growing as well. And you have this kind of surging public care sector that's growing. So competition is real. Competition is as high as we've probably seen it in a while. And that means value proposition is key. Like you need to make sure you know what your value prop is as an operator, and really drive home that message through your enrollment process. So we can be convincing to families about why, particularly one, our sector as a whole, but then more specifically, your individual centers are the best place for families and their children to get care. So what's the data telling us? What's the data telling us? And I mentioned we're kind of moving into this phase of stabilization. And if you're looking at the header of the chart here, you might say, Teddy, it's 10 o'clock in the central time zone here. Why are you throwing median average verbiage at me? What does this mean? Well, let me explain that, right? We love the data point of average leads registered per location. I know that's a mouthful, but what this is essentially telling us is if we look across our entire customer base and aggregate the data, on average, right? How many location, or sorry, how many leads are you registering on a per location basis? And then what we want to do is try to remove noise at the edges, right? Maybe there's a couple centers or a couple organizations that are doing exceptionally well. Maybe there's some that are having a really challenging time period. There might be reasons for that data just doesn't show, right? So what we can do is look at median. We love looking at median because it's a really good indicator for us to just see what's happening kind of in the middle, right? And we can trust that the middle is probably going to tell us a pretty accurate picture here. So overall, we're saying, okay, how is the middle really? How is the middle of the industry looking? And again, this is amongst some of our larger operators over the last 12 or so quarters, for leads registering. 2022 was healthy. 2022 was a good year, I think, right? And again, that was largely driven by, I think, some policy decisions coming out of COVID. We knew how important care was. It was a very good time for growth in stabilization, believe it or not, in our sector. And then what started kind of happening is we really started seeing challenges in growth in 2023, right? And then we really started seeing challenges in 2024. I think last year was a very tough year for growth, very tough year for growth. But what we're starting to see in 2025 is returning to a little bit more of a stable level in terms of the registration or call it the enrollment data that we were in 2023. So wouldn't say we're back to levels of kind of high growth or hyper growth. We're kind of just stabilizing a little bit from what was a really challenging 2023, 2024 period. And y'all can kind of comment in the chat too, or reach out to us if you feel this resonates with what you're seeing. If you feel it doesn't, but this is kind of what we're looking at, a macro trend, maybe a bit of a kind of a stabilization phase, and we're very curious to see how this goes. Of course, Q1 and Q3 are always going to be these kind of spikes, as you all know very well. Those are our heavy enrollment periods. All right. We are now diving in. If you were with us when we launched this series, you're going to be good to go. You're going to be good to go. You're like, I understand this table. I love it. I'm going to go kind of nerd out over this data. Can't wait to get it afterwards, share it with my team and talk about it. If you're new, or you're just like probably the most of us and you need a reminder, I'm going to talk about what this data means first. And I know it's a little overwhelming that you're kind of just hitting the face here with a ton of numbers.
Teddy, really quick, if can you go back to the previous? There's a question on the y-axis. Can you just walk through? This is the account of average leads registered per location per quarter year over year, right? So there's no percentage here. It's a count, average count, right?
Exactly. And we can actually clarify that as we jump into this next chart. And thank you, Brett. I'm not seeing the chat here, so please stop me if you guys see some good questions come in. But yeah, exactly. So let's just say, hey, in Q1 of 2022, you would expect to see 19 leads registering over that Q1 period per location, right? And then down to 15 in that 2024 and 2025 period, right? So that's a pretty significant drop there.
And then the question on cost per lead, we don't really see we don't have visibility into how much orgs are spending on, online or various channels. So it's difficult for us to put a industry average on cost per lead, right?
Yeah, cost per lead's fascinating. I think there's probably a lot of partners we can look at to try to get some industry-wide data on that. It's not always necessarily unique to childcare as well here. This is where we can rely on a ton of different industries to get data on cost per lead, but a lot of this is gonna determine, right, how much are you spending on paid advertising? How much are you spending on SEO optimization? And that's going to really ultimately drive your cost per lead calculation. Yeah. Really good questions. Really good questions. And we'll kind of double click on that here a little bit. So I will spend a little bit of time here just kind of covering this to make sure we're all on the same page, because there's a lot of different ways we slice our data, but we love this view. So I'm kind of going to start here. If you want to stick with me here and just look at this left side of the chart, and we'll talk about our lead funnel, right? Average leads per location. This is just going to tell us, again, pretty straightforward, on average, how many leads is a location seeing over the quarter? How many leads are entering in their funnel, entering in the top of the funnel? Now, our job is to say, okay, based on that grouping of leads, how have they converted through the funnel? And we like to call this our cohort analysis. This is something you'll continually hear from LineLeader as we message cohorts. We're very specifically looking at quarterly data. In this case, Q3 is what we're here to talk about today. So how many leads on average are entering the funnel? Then we're going to look at specifically top of funnel conversion. So you'll hear us reference this as well. I like to split the funnel. And again, everybody has a little bit of their secret sauce. All of our operators will work this a little bit differently. But no matter how they work it, you're typically going to see three distinct phases here of the journey. The top of funnel phase is new lead to tour. How many of my leads are we actually getting to schedule of tour? This middle of funnel here is fascinating because this is what continues to be incredibly unique to early education. Almost no other industry has this, right? Which is the tour. If you're going to actually win the opportunity to serve families, you're almost certainly touring them. So middle of the funnel is, are we actually having families show up for those tours? And are they actually completing them? And then bottom of funnel here is what happens post-tour, right? Once a family actually ends up touring, what's happening to them afterwards? New lead to registered is just going to give us the full end-to-end view of how many leads are getting through the funnel. And then, of course, the statistic we love most of all, we think it's kind of the most indicative maybe of our trends, is just how many leads are registering on average on a per location basis. So we do look at the data in a median view and an average view, and that does help, right? It's just giving you more data points to baseline off of. But just for simplicity, and really what I prefer to look at is always the median columns here, because I think it does the best job at reducing noise, right? Like I mentioned, it's going to kind of take away some of the outliers of maybe really, really high performers, really, really kind of maybe underperformers, and it's just going to tell us kind of how that middle segment is doing. All right. So one new section we also wanted to talk about here today that we hadn't included in the past is the slice of how many leads are actually going to lost opportunity. So you heard me talk about it on the very first slide where we indicated registered for us is indicating that you've offered a spot to a family. They have an expected start date. They maybe haven't started yet. Lost opportunity is that very definitive status of it's okay, right? They're not going to end up enrolling with us. That's an opportunity we did not win. So what we hear a lot from folks and what they've kind of pushed back to us to help answer is, okay, you might have 18 registering over the third quarter, but it's only October 15th, right? What if some of these leads are still going to have a chance to register? And they might. It's kind of maybe an awkward middle of the school year period, but you still might have families that are going to register. So we're now going to include and look at this data point, which is, okay, in the third quarter, right, we're showing when we compiled this data, about 52% of families are going to have moved to lost opportunity, right? So that's going to tell you, hey, if we're seeing about 100 leads come into the funnel, we know that by the time you get into October, you're going to see about 50% of those that are going to be in lost opportunity status. We know that maybe 18% of them have registered successfully with us. So if you're sticking with me here, what that's going to tell us is, hey, we probably have around 30% of our leads that are still in the funnel. And that's important to make sure we know from this data, because if you go run this report in LineLeader, right, it's going to change every day you run it because more leads are going to be moving through the funnel. More leads are going to be moving through the funnel. So it's really important to know that, especially when we're doing this very deep dive analysis on our conversion. But we lock it when we do our analysis, we lock it. For you to know, we lock it as of 1 week after the quarter. So all of this data was locked as of October 7th. But I think this is important to know. It's important to know if you're saying, hey, we're going to get into this a little bit, and you're telling me you're seeing 18 leads registered, right? That number will go up almost certainly because you still have a large number of leads in the funnel that have not worked their way through yet, right? Okay. So let's start diving into the analysis here and understanding what is this? What just tell me, Teddy, what's going on? What do we need to pay attention to? So let's just dive right into the bottom number here because this is, I think, what we again talked about in a couple slides earlier on our trended health. We are seeing, right? We are seeing that the average leads per location is going up, is going up. That's what we want to see, right? That's what we want to see. It is indicating we're seeing our operators, our kind of middle of the pie operators, registering more leads than they were in the same exact time last year. You can see if you look at the bottom of this chart, there's like a lot of red, and we're starting to see a little bit of green. That's where we're kind of indicating we're maybe getting a little more stable. We're not kind of in a hyper growth phase by any means. But after a really, really big drop off in 23 and 24, we're starting to push a little bit back to a stable number here in terms of registrations. So this is generally good, right? This is data that we like to see and we think is a very positive signal. Certainly better than showing red arrows back here. So there's a lot of different reasons why this might be, and you definitely want to understand this, I think, at an individual location level in your business. I think overall that this is what we want to see. So that's good. Let's take a look at another analysis though. Now let's go all the way back to the top of the funnel and just look at how many leads are we generating. You are seeing some green arrows here, right? But ultimately, this is pretty flat, right? About 111 leads in 2024, same time this year, 112, right? On average, you're basically in that same realm too. So again, green is good, but if we're being honest with the data here, we're pretty flat. So that's going to tell us a couple things, right? One, okay, we're seeing probably similar levels of leads generated that we did same time last year. You're telling me though, ultimately we're registering a few more, right? So that does indicate that we're getting a little bit better somewhere in the funnel, somewhere in the funnel. And that's how we like to kind of look at this data and start to pick it apart. Okay, good. Registrations are a little up. We do like to hear that. Leads are kind of flat. Okay, so where are we seeing improvement kind of in that funnel? So the one place that pops out, and you've heard me talk about it a few times today, is that post-tour conversion. Post-tour conversion. We have a lot of operators who I think said, hey, listen, growth is hard right now. Growth is hard right now. Quality is hard right now. Where can we invest to make sure we're putting ourselves in the best position to grow our business, right? To grow enrollment. I think a lot of the focus has shifted towards how are we handling families after the tour? How are we operating our tours? If we're in a competitive landscape and we get a family to this point in the funnel, right? To this point in the process, if they're going to spend the time to come out and view our center, right? That's already a very hard thing to do. Are we putting ourselves in the best position to get that family to enroll? And we are seeing a pretty strong increase here. So if we look at the data, what's really interesting is again, 2022 was very healthy here. Very healthy here. You're seeing almost 50%. You know, you get a family to tour. Hey, you have two families tour, 100. You're definitely getting one of those to register. We really, really saw a struggle here in 2023. That's where it was like, whoa, everything's getting really hard here, right? Policies kind of changing, funding's getting different, public pre-K's on the rise, environment's shifting fast. We're struggling. We're struggling a little bit post-tour. We're seeing the little bit of the rebound here in this specific part of the funnel, which again is good. I think a lot of operators are starting to look at this part of the funnel and invest in it, and it seems to be working. So a huge jump, 42% conversion in that part of the funnel the last year, same time, up to 47% this year. So we'll watch that trend and see if Q4 is showing it as well. And we'll continue to kind of say, hey, we're maybe getting a little bit stable here, which would be good, which would be good. So then let's go look at that top part of the funnel, right? Where we said, hey, costs per lead are going up. It's getting more expensive to generate demand. We're not necessarily seeing a lot more leads come in. How are we measuring quality of leads? Well, we're just not seeing a lot of change in the data here. We're starting to really get similar numbers, which is good in a way for benchmarks, right? If people come back to us and they say all the time, our customers come back to us and other folks in the industry come back to us and they say, hey, what should our target be? And my response is, well, let me tell you all of these different reasons why your target might be different than somebody else's, right? You might be in a different part of the country. You might have different staffing challenges. You might be a class B center measuring against class A, against class C. We might not know a lot of different things. How long has the center been open? So it can be very hard to give somebody a very specific answer on what should your goal be, right? You kind of need to look at your own data to get that insight, but we want to provide benchmarks where we can. We want to provide benchmarks where we can. A lot of times we'll use this data to show trends, but if we can establish a number that we think is starting to repeat itself over and over again, it does become a little bit more useful as a benchmark. And I think in some regard, we're saying, hey, it's pretty common to see 60% of every lead you generate schedule a tour, right? If I'm going to go get 100 leads into my CRM system, I should probably expect 60% of those to schedule a tour and 40% of them to just kind of drop out. Now, of course, my focus should immediately be, okay, what sources did those 60 who scheduled a tour come from? And how do I go double down my spend on that? What sources did the 40 who didn't tour come from? And how do I kind of drop those a little bit? But on median, right? You're kind of starting to see a pretty stable number here that 6 out of 10 leads that come in your system uh, to tour is a good benchmark to evaluate. If you get over that number, you can be pretty confident you're going to be ahead of the competition. If you start to sink below it, you're probably going to be pretty confident that you're a little bit maybe below the competition. But no matter what, you just want to know what this data point is for your business. You want to look at this probably at an individual center level, and then you really want to start to look at this at a source level, right? So you can kind of stop funding those channels that aren't producing as well.
Hey, Teddy, we've talked about this a lot. Questions around, what type of location or center does this represent? Is this ramping? Is this new? Is this mature? Um, and I think the question is all of the above, right? So if there's an active location that's working to drive enrollment, whether it's a new, mature, or ramping center, this data doesn't differentiate between the two.
Yeah, and that's such a great call out. And that is true, right? There are things we can we can stack really, really well to provide this analysis. There's other things we sometimes can't. We don't really have a great way to know, is this a new center? Is this a ramping center? Is this a mature center? You will have a good opportunity to know that though. Like you individually will. And there's tons of tools you can use to segment out those groups when you're looking at your data, and you should, because you might see these numbers drastically vary between those groups. Pretty hard for us to make that distinction. So you're kind of seeing all those center types grouped together here in this data. So when we started putting this analysis together, we always ran it in a cohort view, right? And I'll just kind of go over this again because we love data, but it's super important we understand where it's coming from, right? This is our cohort view. This is your way to tell me exactly how many leads came in that quarter, in quarter three, and how many of those specific leads made it through my funnel. It's a very, very kind of specific cohort view of just that data. Any other data in your system is just getting completely ignored. We love doing this analysis because it can provide us really, really great information on where we're successful in our funnel, in our enrollment process, and it can provide a really, really, really good analysis on which channels, which marketing channels are the most effective. But we often get asked the question, well, okay, you're telling me Q3 only in this view. What if I had a lead that we generated in Q2 in June? What if in May or June a family reached out and they said, "Hey, I want to enroll in September"? That's very common, right? So we started saying, "Hey, what if we start displaying kind of our non-cohort data set, which is just going to tell us what has happened over that quarter, totally regardless of when the lead was created." They could have come in your system in June. They could have come in May. They could have come in 2024, right? This is just going to tell us, let's just look at Q3 here. Just look at Q3 here. This is going to tell us just how many did you see occur. So if we just look at registrations, which I think is really interesting to frame the conversation, and again, I'll just confirm this once more. This is telling us, hey, it's pretty normal to see in Q3 that on a location basis, you would have had 24 registrations in Q3, regardless of when leads were created. If I went back now and looked at just our cohort view, we're going to say, okay, well, if the lead was created in Q3, right, about 18 of those had registered. 18 of those specifically had registered. So that's going to tell us, if we do some math, 18, 24, you had about 6 leads registering throughout the quarter that were not generated in that quarter. It's just another really interesting data point, because we're seeing operators register more than 18, right? We're seeing them register 24. It just depends on, do we want to look at just the leads that came in throughout the quarter, or do we want to look at the entire universe of data and just say what happened? So I think these are both very important data points. I think you should definitely be evaluating both of them. They're going to answer different questions. They're going to answer different questions, right? I'll say again, if somebody comes back to your business and says, are we effective top of funnel? Are we effective at touring? Are we effective at getting leads who toured registered? Is Facebook a good channel? Is Instagram or social a good channel? How about direct, right? How about paid traffic? Is Google paying off? What about referrals or local advertisement? All of those questions should be answered by looking at a cohort view, because we really want to be specific about the time period of data we're looking at. Now, on the flip side, if somebody comes back to you and says, just tell me what happened. What happened over the last 3 months? How many leads did we get? How many tours did we get? How many registrations did we get? Then you want to look at the non-cohort view. We don't really care about isolating the data so much. And our operators are telling us right now that you would expect to see about 57 scheduled tours, right? 46 completed tours. That's on a per location basis. So maybe expect to see, if that resonates with you, around 15 tours a month is going to be what we're seeing, throughout the quarter, and then 24 registrations. So this is a really interesting view. We're going to keep doing this. It'll get more interesting when we can trend over past years here as well. So we'll start to get kind of the trended analysis on this as well. But I think it's helpful data that a lot of our customers have asked for, and we're happy to publish here. So we're kind of wrapping up here a little bit, and I know I've been throwing so much at you. So thank you for sticking with us. A lot of times we do produce data in what we call kind of the enterprise segment. And as I mentioned, we do that. We segment our data for a couple reasons. It's really helpful for us to kind of split the viewpoints, but it's important for you all as operators too. We have an incredible ability to work with all operators across the ECE landscape. We absolutely love working with our single center operators. We love working with our growing mid-market operators, and we love working with some of the larger operators in the space too. Every company needs to approach their business a little bit differently throughout these phases, right? And that's largely because resources are just very different. Strategy is very different. A lot of times when we publish most of our data, we do it through looking at the enterprise segment because, quite frankly, it's like kind of the best indicator for us. We have the most data to aggregate. But when we're talking back to you all, we do want to provide a slice of each segment. It's really important because that's going to tell us other trends as well. And it's also going to provide you benchmarking tools. Like it's not, again, going to be terribly helpful for you to benchmark against 500 center operator. If you're not a 500 center operator, you're in a very different position. So we always show this table. It's the exact same cohort view, just by these various segments. So you can get a chance to kind of look at what segment you more closely align with, and benchmark yourself off that. What is interesting, and again, we're probably always going to see this. Our enterprise segment is generating a lot more leads than their kind of counterpart segments. We talked a lot today about the cost per lead going up. I mean, that's a huge reason why, right? How much money do you really have to go spend in demand generation? Everybody has a budget here. I get everybody has a budget, no matter what your size is. So this is a challenge for every operator. But it even is a little bit more when you don't necessarily have scale. So I think it's critical to understand like where your marketing dollars are going and what's working, especially if you don't have as big of a budget there, right? It's critical you're spending in the right areas. But what was probably interesting is even within your own segment, the mid market and the SMB was down a little bit. So lead generation was dropping, where we're kind of flat, a little bit more flat in the enterprise space. But you're generally going to see this trend continue that our largest operators are going to generate about double the amount of leads. Now, when you look at the actual conversion funnel itself, right, you do start to see some interesting patterns. You start to see some interesting patterns. We actually see our smaller operators are more effective in tour conversion, right? They're very high conversion rates of actually getting tours through because again, you probably maybe have a little bit of a higher quality of lead, but ultimately sometimes a little bit lower in that post-tour conversion. So, this maybe is a good takeaway as well, is just always evaluate what are we doing post-tour. That's where competition becomes huge as well, right? Okay, the tour happened. That's great. We spent a lot of money to get that family in the door. Well, they've maybe been looking at 1, 2, 3, 4, 5, 6 centers. Now we really got to think about what we're doing to win the opportunity to care for that family. So that's really important to look at in a good distinction. And yeah, it kind of becomes a little bit of a math game, right? If we're kind of generating around half as many leads, we're probably going to register. We're probably going to register around half as many as well. So that's just something to keep an eye on. We always want to produce this by segment because it does help us understand if we have really conflicting trends. I don't think we do here, right? I think the trends are largely very similar. We are seeing some growth, some kind of flat or growth here in registrations in all segments, which is good. And this is just really helpful for you to kind of benchmark against yourself. So where do we go from here? Hopefully this has been a very great view at the data for you all. I hope you're finding some takeaways for this. I hope it does resonate. Definitely let us know, please, if you think, hey, this is totally what I'm seeing, or if you think it's different, right? If you're saying, hey, I'm growing like crazy. We're crushing enrollment. Or maybe you're on the other side and saying, hey, you're kind of saying it's stable. I'm really struggling to be stable, right? Like we're we're still kind of feeling like 2023, 2024, right? We can't get the wheels moving as well. I think all those stories are true out in the space, right? When you talk to operators, I am always going to urge our customers and anybody in the space to you got to go look at this on an individual basis because you can start to go so many layers deeper that's very hard for us to do at an aggregate level. So I've talked about this a lot. Number one is like definitely want to do an evaluation of channels. Definitely want to do an evaluation of channels. Which channels are driving most of my leads to tour? Which channels are driving most of my registrations? It is expensive to market. It is expensive to get a family to walk in your center. Make sure you're spending your money in the areas that are working, right? And dropping it from the areas that aren't. Um, on that exact same token, right? Which of our sources are converting the best? So when we talk about channels, are we seeing a lot come over the web? Are we seeing a lot call in to maybe a call center? Are we seeing a lot walk in, right? That might be a channel. Our sources, as we talked about, Google, social, maybe paid versus organic versus direct, right? All of these things are very important to know. What activities are leading to the most registrations? Every so often, we're going to pull data around this as well. Are you set up to text families? This is something we've kind of been preaching a lot over the last couple of years. Millennial, Gen Z parents love to text. Like I personally can't even use my phone anymore because I literally am riddled with spam calls all day long. If I see a number I don't know, like I will not pick it up. So, unfortunate reality is calling is hard, emailing is quite frankly hard, and texting is pretty effective, right? So, what are the activities that are leading to registrations? We probably want to do all three of them, but it's good to understand that. It's good to understand that. Look at a couple examples of families that really went well through that process and evaluate kind of the touch points you delivered. Lost opportunity, it always feels it feels like a bummer to move a family into the lost opportunity category. And it is kind of painful. And we really sometimes try to wait as long as possible to do this, but it will happen. Like I just showed you a chart that said at the 1 week after the quarter, you're going to see the most successful operators in the space are moving half of their leads to lost opportunity, right? So this is going to happen. It's just part of the enrollment process. So you want to make sure you're capturing data through this experience. Like, why did we lose them? I mean, it'd be amazing if we were able to start as an industry to capture how many families we maybe are losing to the public sector. Are you losing just to other local, private-based care from a competition standpoint? Are you losing on cost? Are you losing on programs? Are you losing on security? It's so important to know that. So I would make sure you're really evaluating kind of why you're losing leads. That's as important as a data point as any others. Age groups are fascinating. This is something we're going to continue to look at from our side as well. Birth rates are a big topic, right? Is it harder and harder to get infants in the door because maybe there's fewer of them, right? I think older children are getting harder as well because maybe younger kids I'm less likely to use public care, but as they start getting a little older, I'm now actually starting to be a little more appealed by public care. So I think age groups are fascinating to look at. I think you all typically have really good insight into the ages where maybe you're seeing more or less enrollment. But this is fascinating. It's a data point we want to track as well. Obviously, getting kids in your center at the youngest age possible is the best because of the value of that family throughout their life cycle. But it also gives you an opportunity really early on to establish why your services are worth it and really keep them involved all the way up through their child's young life. So That's what we had for you today. I know that's a lot of data to throw at you on a Wednesday morning. Hopefully that's interesting and has provided some insight. We love to share what data we have and what trends we're seeing. I will always again push back at you all to kind of look at your own data set and see what trends you're viewing within your own data, because it's going to tell a lot of story we don't necessarily have access to. But we love the industry. We love serving you all. Thank you all for what you do. And if there's anything else we can help with, please let us know.
Thank you so much, Teddy. We do have a couple of questions before we jump. I know we went a little bit over on time, but thank you for all the great insights and thank you everyone for participating in the chat. Matthew has asked, what types of things are centers doing post-tour to improve results? I know you shared your personal experience about like understanding what parents want and making sure you have like multi-touch follow-ups and making sure you have prompt thank yous. Is there anything else that specifically our customers have done to improve in that area of their business?
That's a great question. It's a really good question. What's so unique about the post-tour aspect is you start to really rely on what's happening at the center, and that is oftentimes something that doesn't get conveyed in data. So there are very two distinct streams here, right? Like how are our actual tours being run? Do we think they're effective? I think out in the industry, operators have like very effective ways to kind of monitor this, which is incredibly important. But then more on kind of the system side, yeah, how are we structuring our follow-up? What are we handing that family when they leave the door to make them expect a follow-up back from us, right? What are we asking them to provide us? We've given them the time to come and see our center. Are we leaving them with the expectation that, hey, we are going to follow up with you. We'd love the opportunity to work with you. I think the engagement post tour is critical too. Like we don't want to see a family come in and tour and then kind of forget about it. That's going to be the worst, the kind of the worst position you can put yourself in. Like don't expect them to call you back because odds are they're going to go tour a couple of other centers, and you want to remind them, really keep your center, your value proposition top of mind, for them. So I think it is a two-pronged approach. I gave you a little bit of a general answer there than something terribly specific, but make sure you have a strong follow-up post tour designed. And then also there is an element where, of course, you just want to understand what's happening at the center. Maybe the last piece I'll leave you with that actually we see being really effective is post-tour surveying. Surveys are tough, right? People get a little frustrated by them. You don't always get a terribly high response rate. Every piece of feedback you do get, though, is so helpful. So I would really suggest looking at things like post-tour surveying because you will find out some parents might say, "Oh my God, the tour was horrible." Okay, I know where to look. Or they might say, "Hey, listen, it was great, loved it, but ended up looking at a center down the street that had XYZ, you didn't." Okay, wow, that's incredible data point too. So I think that can be an effective tool.
Awesome. Thank you, Teddy. A couple more questions. Mike has asked if we have seen any data to indicate better results in getting a tour scheduled via a self-schedule, such as on your website, or something done by the center directly from a call, a text, or email communication. I don't know if we get that granular, but figured I'd ask.
Yeah, we do. I mean, we don't have that data published here today for you, but we do actually have that data and insight, right? Are you seeing higher registration rates from self-book tours or not? I will tell you, you just absolutely have to have a self-tour option. Like it's pretty much non-negotiable these days. Parents are so expecting it. It's tricky because like we are in a very emotional security, safety, high cost industry. Like families are making a huge decision enrolling in care. And at the end of the day, like really, the directors who are talking to these families are incredibly skillful at conveying that care. But you just run out of time. you run out of time, and you're going to end up losing out to the competition. Because if I'm putting myself in a situation where I'm letting families book tours directly from my website, and the center down the road, every single family has to call and schedule that. I mean, you only have staff at the center so many hours a day, and they're only by the phone so many hours a day. So I think it's absolutely non-negotiable, like from our perspective. It is a good question though, like how can we pressure test the fact that these leads are enrolling at the same rate ones that call are, and at times they might not be, but the volume of leads you're going to push through your system, right, is going to be so significant. You just have to do it, and maybe you tailor it differently, right? We have some customers who will have the system generate a task for them when a self tour comes in to call the family. So how about that reverse approach? That's very cool, right? Self tour comes in. Hey, first thing I'm going to do now is go call the family and say, hey, we saw you booked a tour. So happy. Can't wait to meet you. Now you've kind of had your cake and ate it too, right? You've made it really easy for the families to book tours, but you've just delivered a personal touch point before they've walked in the door. So I think you have to do it. There are ways to still make it very unique to you.
Wonderful. Thank you, Teddy. One last question. Sarah has asked, what is the typical amount of time it takes for a lead to go from initial inquiry to registered?
Yeah. Another awesome question. Really good question. We should probably start publishing these, and I'll give myself a goal of maybe trying to get this published the next time we meet with you all in 3 months, because I can't lie to you and say we can't aggregate this data. We actually can, and we have in the past. So we didn't present it for you here today. I do think, as we just looked at the data, what can we see, right? We had said 18 average registrations throughout the quarter of leads that came in the quarter. We said 24 overall. We know that about six, that's going to be about 25% of our leads maybe came out outside of the quarter they were in. So that's going to tell us, hey, you should probably still expect a vast majority of your leads to be registering within a couple month period of them entering the system. I think it's actually probably more aggressive than that. I think you're generally going to see around a 30-day timeline of a family to register from when they enter your system. I think if it starts extending beyond 30 days, you're really starting to decrease the likelihood of that registration occurring. I think if it expands beyond 60 days, you're really probably getting to a place where it's unlikely to see a registration. So I would monitor this, definitely monitor this. And of course, wait lists are a huge reason why you're going to see your data change here. But when wait lists aren't in played, you're not going to, I think when we look at really successful operation, you're not going to want that lead in your pipeline more than 30 days.
Wonderful. Well, that covers all of our questions today. So thank you again, Teddy, for this great and very insightful presentation. We'll catch you all in 2026. Thanks for staying late, and we'll be in touch soon. Thank you so much.